This is a dramatized story inspired by real debt situations. For educational and entertainment purposes only. Not legal or financial advice.
$81,000. That's what my small business owed the day I locked the front door for the last time. I was 45 years old, and I had no idea what came next. Not $81,000 spread over 20 years of bad luck. $81,000 built in under 3 years. Business loans, credit cards, unpaid vendors, back taxes. And it all had my name on it. My name is Marcus. I'm a former restaurant owner from Columbus, Ohio. And this is the story of how I lost everything, hit the lowest point of my life, and found a way through it. Not clean, not fast, but real. I opened the restaurant when I was 42. A small breakfast and lunch place, 32 seats, good corner location near a high school. I'd worked in restaurant kitchens for 15 years. I knew food. I knew service. I thought I knew enough. The first year was hard but promising. We were doing about $12,000 a month in revenue. Not rich, but enough to cover the lease, pay my 2 part-time employees, and start chipping away at the $45,000 SBA loan I'd taken out to get the doors open. My wife, Dana, kept her job as a dental hygienist. We figured her income would carry the house while the restaurant found its footing. Then, year 2 happened. A new brunch spot opened 4 blocks away. Trendy, Instagram-friendly, with a patio and bottomless mimosas. Our Saturday morning rush dropped by 40% in 6 weeks. I responded the way a lot of small business owners do. I panicked and I spent. New signage, a catering menu, a social media consultant I paid $900 a month. None of it moved the needle. By month 18, I was pulling from our personal savings to cover the restaurant's payroll. I told myself it was temporary. Dana didn't know the full picture. I showed her the revenue number, not the expense number. The gap between those 2 figures was where our future was disappearing. By the time I was 44, the debt looked like this. The original SBA loan still had $38,000 remaining. I'd barely touched the principal. A business line of credit I'd opened to cover the slow months, $17,500. A personal credit card I'd started charging business supplies to, $14,200. Unpaid invoices to 2 food vendors who had stopped delivering until I caught up, $6,800. And a payroll tax issue. I'd missed 2 quarterly filings with the IRS because I didn't have the cash. That had grown with penalties to $400 to $500. Total, $81,000, give or take. I remember sitting at the prep table one morning before we opened, just staring at that number on my phone's calculator app. $81,000. I had $340 in the business checking account. I had a lunch service starting in 4 hours. I kept going for 3 more months after that. I don't know why, exactly. Pride, maybe. Fear of what stopping meant. The restaurant had become my identity. Closing it felt like admitting I was a failure as a husband, a provider, a man. So I kept unlocking that door every morning and pretending everything was fine. The collection call started on a Tuesday. First, it was the vendor. A woman named Brenda from a food distribution company who had been patient for 4 months but was done being patient. Then it was the credit card. Then the bank flagged the line of credit as delinquent. 3 calls in one afternoon. I didn't tell Dana that night. I sat across from her at dinner and talked about the weather. The IRS letter arrived the following week. It wasn't a casual reminder. It was a notice of intent to levy. That means they were telling me, officially, that they had the legal authority to start seizing assets, business equipment, potentially, eventually, our personal bank accounts. The penalty balance had climbed to $5,100. I read that letter 4 times standing at the kitchen counter. Dana walked in, saw my face, and asked what was wrong. I said, "Nothing. Junk mail." I put the letter in the trunk of my car, buried under a gym bag I hadn't opened in 6 months. That's when the real deterioration started. Not financial. That had already happened. I mean, personal. I stopped sleeping more than 3 or 4 hours a night. I'd lie awake doing math in my head, trying to find a combination that worked, some sequence of moves that would solve the equation. There wasn't one. I knew there wasn't one. But my brain kept running the numbers because running the numbers felt like doing something. Dana noticed I was distant. We stopped talking. Really talking. About anything important. I went through the motions. I coached our son's Saturday soccer games with my phone face down in my pocket, vibrating every 20 minutes with another call from a number I didn't recognize. I made 2 mistakes in those final months that I want to be honest about, because I've talked to other small business owners who made the same ones. Mistake number 1, I took out a payday loan. $2,200 at an annualized interest rate that I later calculated was somewhere around 380%. I used it to cover 1 week of food costs. 2 weeks later, when the automatic repayment hit my account, it overdrafted my business checking and triggered $140 in bank fees. I had borrowed $2,200 and came out approximately $600 worse than if I'd just let that week go. Mistake number 2. I cashed out the only retirement account I had. A small IRA I'd opened years ago when I was working for someone else. It had about $9,400 in it. I withdrew everything. The 10% early withdrawal penalty and the income taxes I owed on that distribution took roughly $3,100 off the top. I netted around $6,300. It bought me 6 more weeks of operating a restaurant that was already dying. 6 weeks and about $3,100 in permanent losses for the privilege. I am not telling you those were smart moves. I am telling you they are the moves you make when you are desperate and not thinking clearly, and you have not yet talked to anyone who can help you understand your actual options. The restaurant closed on a Thursday in March. I had 8 customers that day. I paid my last employee her final check, wrote it from my personal account because the business account was empty, and I locked the door. I sat in my car in the parking lot for 45 minutes before I could drive home. That night, I told Dana everything. I don't have clean words for that conversation. She was quiet for a long time after I finished. Not cold, just processing. She asked how long I'd known it was this bad. I told her the truth. She cried. I cried. It was the first honest conversation we'd had in almost a year, and it happened because I had run out of things to hide behind. Dana was the one who found the nonprofit credit counseling agency. She'd been doing her own research, apparently. She'd sensed something was badly wrong for months. She had already looked up our options. She handed me a printed page with 3 phone numbers on it. "Pick one," she said. "We're not doing this alone anymore." The credit counselor's name was Yvonne. I called her the next morning. She worked for a nonprofit agency affiliated with the National Foundation for Credit Counseling, the NFCC. The consultation was free. Yvonne didn't make me feel stupid. She asked me to pull together every debt, every account, every balance, and she walked me through it systematically, the way a nurse takes vitals. Calm, thorough, no judgment. Here's what she explained to me, and I want to share it because I genuinely did not understand these distinctions before that call. When you're in serious debt, there are a few main paths. Debt consolidation means rolling multiple debts into one loan, usually with a lower interest rate. This works if your credit is still decent, if the debt is primarily credit cards rather than business loans and IRS obligations, and if you can realistically make the new monthly payment. For me, it wasn't the right fit. My credit score had dropped into the low 500s by that point, and 2 of my biggest debts weren't the kind that consolidation handles cleanly. Debt settlement is when a company negotiates with your creditors to accept less than the full amount you owe. It sounds appealing, but Yvonne was straight with me about the risks. Settlement companies often charge significant fees. The forgiven debt can be counted as taxable income by the IRS, meaning you get a 1099 for the amount that was canceled and potentially owe taxes on it. And your credit score takes a serious hit during the process, which can last years. She said, "Not impossible, but know exactly what you're signing. Then she explained bankruptcy. Two main types matter here for most people in my situation. Chapter 7. Bankruptcy is a liquidation. A bankruptcy attorney files on your behalf, the court appoints a trustee, and most of your unsecured debts, credit cards, medical bills, certain personal loans, can be discharged, meaning legally eliminated. The process typically takes 3 to 6 months. The catch is the means test. Your income has to fall below a certain threshold for your state, and you have to qualify. Also, secured debts like a mortgage aren't just wiped away. You still have to deal with those. Your FICO score will take a significant hit, and a Chapter 7 stays on your credit report for 10 years. But for someone buried under unsecured debt with no realistic path to repayment, it can be a legal reset. Chapter 13 is different. It's a reorganization, not a liquidation. Instead of discharging the debt outright, you work with a bankruptcy attorney and the court to create a repayment plan, usually 3 to 5 years, that fits your actual income. You keep more of your assets. It can stop a foreclosure on a home and give you time to catch up on secured debt. Chapter 13 stays on your credit report for 7 years instead of 10. It's more complex and more demanding. You have to stick to the plan for years, but it gives people with regular income a structured path forward. Yvonne also explained something important about the IRS debt. Federal income tax obligations don't automatically go away in bankruptcy. There are specific rules about which taxes can potentially be discharged and which can't, depending on how old they are and whether returns were filed. She strongly advised me to consult both a bankruptcy attorney and a tax professional about the IRS piece specifically. I want to be clear. I am not a lawyer or a financial advisor. Please consult a licensed professional before making any decisions about bankruptcy, tax debt, or debt relief. What works in one person's situation may be completely wrong for yours. For me, after a full review, the path that made the most sense was Chapter 7. The SBA loan, the credit card debt, the vendor invoices. Yvonne explained that many business-related unsecured debts can be included in a personal Chapter 7 filing. I found a bankruptcy attorney through a referral from the credit counseling agency. The initial consultation was free. The filing fee and attorney costs were real. I want to be honest about that. But there were payment plan options, and the attorney helped me understand exactly what we were filing and why. 5 months after I locked that restaurant door, the discharge came through. Not everything was resolved. The IRS situation required its own separate negotiation, and that took another several months to work through with a tax professional. Dana and I had to rebuild our budget completely around her income while I looked for work. I got a job managing kitchen operations for a catering company, using the skills I had, but drawing a paycheck instead of carrying all the risk myself. Our credit scores were wrecked. I'm not going to sugarcoat that. Rebuilding a FICO score after bankruptcy takes time and consistent behavior. Secured credit cards, on-time payments, low utilization, patience. We were not buying a car or applying for a mortgage anytime soon. But we were no longer getting calls at 7 a.m. and 9 p.m. We were no longer hiding mail. We were no longer lying to each other. The morning the discharge letter arrived, Dana and I sat at the kitchen table with it between us. I thought I would feel relief. I did, but not the way I expected. It was quieter than that. More like of something that had been very loud for a very long time. I'm 45 now. I don't know if I'll ever own a restaurant again. Maybe, maybe not. What I know is that the shame I carried for those 2 years almost cost me more than the money did. It nearly cost me my marriage, my health, my ability to be present for my kid. If you are watching this and you recognize anything in this story, the hiding, the running, the numbers at 2 a.m., the letters going straight to the glove compartment, I want to say one thing to you directly. The options exist. You have not gone too far. But you have to stop carrying it alone. Call a nonprofit credit counselor. Talk to a bankruptcy attorney for a free consultation. Get a licensed professional to look at your actual numbers, not a payday loan company, not a debt settlement ad that found you on social media. A real professional. And if someone at home is watching you go quiet and distant and you keep telling them everything's fine, tell them the truth. The money stuff can be worked on. What's harder to repair is the distance you create trying to protect people from numbers on a page. Get the free debt checklist in the description. Link below.